Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 24th of March, 2025. I think we're around 6:20 p.m. or so. I didn't look at the time just now, but we got to be in that zone. All right, my friends. You had a big rally today in the stock market. Gold is starting to pull back. Could go back down a little bit if you look at the metal report that I've got. The dollar index rallied back to the 18-day average of closes, where I think it's going to have a bit of problem. You have an energy market that went up today as President Trump has decided to really turn the screws up on Venezuela. Now, what I was reading last week is he was giving Chevron a chance to get out and do certain things. I don't know what happened between Wednesday and last night. But today, the president decided he's hell-bent against anybody doing business in Venezuela for oil. So any country, and this was his edict today, any country that buys Venezuelan oil and does business with the United States on the products they sell the United States, 25% tariff added on to any other tariff they have on already or that he's going to put on. Those are pretty rough ways. So what that does is it takes Venezuelan oil basically off the market. Who does it hurt most? And go after China. They've been the big buyer of the Venezuelan oil. As you can see in the bonds and notes, you're sort of drifting here. And the market today added back yield because the service sector PMI took off to the upside. It went up 2.5 points. The market wasn't looking for anything in that realm. The industrial sector did fall back. So how do you figure out these tariffs? Because Liberation Day, as President Trump has named it, is coming on April 2nd. On the day before, I don't know what he calls that day, pre-Liberation Day, he will have an idea of what he should do in tariffs. He has made statements that keep contradicting other statements, such as in Venezuela today, but other parts are now, it's not going to be sector specific. It's going to be country and product specific. That's a big difference. Does that give the go sign to the autos, to the lumber? I don't know what it means. And by the way, I don't think anybody else really knows what it means yet. They talk about what's going to happen, but I am convinced President Trump shoots from the hip, does it at the last second, consults, but that's where it ends. What they think they know, they don't necessarily know. I could be so wrong on what I'm saying, and I apologize if I am. But that is my impression, and I probably spend more time reading during the day than any two of you. I know that sounds crazy. I wake up, start reading at 4:30 in the morning, and I go literally all day. All right. So that becomes one of the problems. Tomorrow, we're going to get more economic data. You're going to get the Red Book Group coming out at 7:55. The Conference Board is going to give us U.S. consumer confidence at 9. The Richmond Fed monthly manufacturing sector index for March at 9. And residential home sales for February come out at 9, and they're looking for 679,000. Now, remember, we're looking at the sellers of homes, K&B and other companies, giving very bad forward guidance and missing on some numbers. So you've got to pay attention to all that going on. So let's go to the chart action and see what we have here. When we look at the S&P weekly, you're up pretty good. You're up 3.4% for the week. That's nice, but you came down rather dramatically. And today I heard traders, and it was on Bloomberg and Reuters, is the bottom in for this break. Your guess is as good as the guy that wrote that article. There's no way to tell because you don't know what these tariffs are going to do and what the reaction. It's not just what the U.S. does. It's what the U.S. does and how the other countries react. So do I expect milder tariffs now than I did a week ago? I do. Does that mean there still won't be reactions? No, there'll be reactions. Could the market have bottomed out? It could have. Do I know? Absolutely not. All right. What I see here is a market with a bounce. When we take a look at the chart here, I start getting better information. There is a pattern of higher lows and higher highs. So if you take the name off the chart, and that's the way you try to figure things out, You take the name off. You don't know what it is. The pattern is bullish there. The market for the first time today closed over the 18-day average of closes. So that determines bias. So the bias for the very first time since back here, mid-February, is back over the 18-day average. So I see a market that is trying to correct. I see the next resistance being the 200-day average at 59.01. From here, that's about 90 points away in rough math. I see a market that might have support at the 18-day average, and momentum had turned up. Now, lo and behold, do you remember I told you every day last week we had lost the bearish embedded reading? Watch. And I was looking for price and the 18-day average to come together before you took out these lows. Go check what I said. And here was the market, and I still said it, and I think it's going to happen. And it took a while. It happened today. So I am now at the point where I chalk that one up, another one of this momentum leading price. And now the question is, what do you do? Well, certainly between here up to the Bollinger Bands, loaded with resistance, but you're not in the bear camp anymore. So I agree with the writers that said, until you take out the lows of last Friday, I believe the market has put in a trade bottom. Whether it's the bottom, I can't answer. When I take a look at the NASDAQ, you had lost your bearish embedded reading here. It took until today. You did not go under that prior low, and now it's not the similar story. Why? Because you have a lower low, higher high pattern. You've negated the downtrend. I don't know that you've started an uptrend. When I step over to the Dow, a lower low, higher high. Same story. Do you disagree that right here you lost the bearish embedded reading, and before you went back to that low, the momentum was calling for a higher price? And in the Russell, you have a lower low, higher high. And the Russell all the way back here made that pattern and then took off to the upside. So basically what has worked out, is you've lost downside momentum, and whether or not you're in an uptrend, the only one of the indexes I see that I can make that statement is the S&P. The others have higher highs, lower lows. In the DAX, if you get underneath now the lows of last Thursday, you've got a problem in the market. You will then have the pattern of a lower low, lower highs, under the 18-day average, momentum pointing down, and you could easily be in correction territory. Not a 10%, 20. That's not what I'm saying in any manner. I'm just saying you could back off in the market. Then we come to the June 10-year note. We have a higher high, a lower low. Look at how the market is breaking down, and it's oversold. So right away, we're getting into a zone here where I would be telling my traders, if they were short, and I don't see how to be short there, first support coming in right here at the lower Bollinger Band down to the 100-day average. Next to 2-year notes, same type of story, higher high, lower low pattern, and getting oversold. In the dollar index, I was wrong this. I didn't think the dollar was going to lose its bearish embedded reading. I'm wrong. Now it's the 18-day average of closes. The market got up today to 104.13. It already hit it on the day that it lost it, so it need not go any further, but I didn't expect that to happen, so it was not a good currency trade that I put out. Simple, okay? If they all won, I'd be walking on water. I don't. I'd probably sink. Higher high, lower low, and away you go. I see no reason to be bullish, and I have now no reason to be bearish. In the eurocurrency, it's the flip-flop. If the dollar's going up, since 57% of the dollar index is made up of the euro, it falls back. And it went right down to its major support, the 200-day average in the 18, and it stopped. It had lost, and just to show you here, it did not lose the embedded reading on Friday, or did it? Watch. Let me get you back here. Okay. This is the reading on Friday. Unfortunately, it wasn't under 79. Had it been, I'd have been telling you over the weekend, that maybe the market will just hold the 200-day average. But when you're like that and near the low, if you don't pop right away, you can lose the reading. And it's what happened today. So you've lost it, and now you're into all the support. It is certainly, in my opinion, not a spot to go short, but you have no reason hanging in there from my perspective. In the British pound, it looks like prices want to come down at this point in time. You've lost the bullish reading. I see nothing to stop the market from making a run at the 18-day average of closes before it tries to make new highs. In Bitcoin, if the NASDAQ is up, this is how it's recently been going, then Bitcoin is. Your chart probably has the capability, if you have a good charting service, of laying one chart over another. Do it in the two and get ready to go, whoa, I see what Ira's saying. Make it as a line chart better than a bar chart, and you'll get a better feel for it. So the momentum there, picking up with it, okay, you can go higher. Why not to the upper band? In the crude, you rallied now into the resistance of the upper Bollinger Band and the 100-day average. You never did embed. This has been a bear market rally all the way through, and I think I've given you the Venezuelan reason for that. The WTI crude's not quite as strong as the Brent will be, because Brent will pick up some of the demand that Venezuela can't sell. And you'll see how the market is maybe going to make it up to that resistance. Heating oil, still coming up, overbought as can be. Natural gas, maybe it gets down to the Bollinger Band, but you're already oversold. You're in borrowed time factor. Doesn't mean you can't go lower, but when you're oversold, I teach you don't deploy new money. One of the things I also teach is to take advantage when I put out these special reports, and my gasoline report goes off the board, our website, tomorrow. So to take a look at it, go to iraepstein.com. I cover the seasonals, the price count, which was met, the third one, and that's often the last one that you make. You can go to 4 or 5, but they're so rare. It's like winning the jackpot in Vegas, honestly. 3, you're really pushing it. You went to the third zone. And from my perspective, you got far enough down. And now we're getting a correction. Does it turn into something more bearish? I don't know. But what I do know is what the seasonals do at this time of the year, and I cover them in the 5, the 10, and the 15-year basis. I cover for you ETF that you can place in case you don't want to play with the futures and how to do it. So, iraepstein.com, and just go to, you'll see it on the top left, energy report. Give it a click. It's in bright green, and away you go. I'm Ira. You take care.